join, and I'm joined by my colleagues Paolo Neri and Dr. Jay Syret from the Genscape oil team. For those less aware of Genscape, we're the leading global provider of energy information for commodity and financial markets, utilizing patented technologies and proprietary algorithms. Genscape provides accurate and timely data on capacities, flow, and utilization for all major energy commodities. Our network delivers insight and offers a competitive advantage to all our clients. Before we begin, I'd like to point out that the team will be happy to address any questions at the end of the presentation. These, as you can see on the screen, can be posted in the text box provided on the right-hand side of your screen at any time. With that said, I'll now hand over to Paolo to begin the presentation. Paolo.
Thank you very much, Simon. I'm Paolo Neri, and I want to just start off by thanking everyone who's dialed in, or some of you have come in early from the US, as we can tell, and that's very impressive. We're all thrilled to have you. Genscape's been looking at the broader West African market now for quite some time and noticing the changes in the global markets. I'm sure many of you have been aware of the broader picture, and we're just going to go through a couple of scene-setting slides talking about the broader issues. Then we'll drill into the sorts of analysis we've been doing in the last several months, focusing on Q4 13 and the observations we have been able to make on the data that we've uncovered watching flows. Just to get things started, this is our starting slide on the wider picture of West Africa, looking back to 2010, when things were very different from what they are today. Back then, I think we all know there was considerable U.S. demand compared to now. Even as much as 14% of U.S. crude at that time was coming from West Africa. That was buoying up the West African crude prices. Not long after, of course, the shale revolution in the U.S. began to open up more oil supplies on the back of those gas discoveries and made the U.S. more independent, or we should say less dependent on foreign imports. And West African crudes were some of the first to stop flowing to the U.S. In the past year, in 2013, we saw that accelerate a great deal. Conversely, there was some decline in export from Libya and Iran in kind of on the back of the Arab Spring movements, and that has kept some of the supply down out of Africa, and that's helped to buoy West African prices. On the other hand, we're now starting to see Libya begin to ramp up, and Brent prices stabilizing, and of course the effect of Iran sanctions possibly lifting in the near future. That may all put pressure. So these two parts of the slide here, above and below the line, are factors that are buoying prices or pressuring prices. Also pretty familiar to most of you from the flip side, as I said earlier, 14% of U.S. imports were from West Africa, but from the other perspective, back then in 2010, 41% of West African output was going to the U.S. So they, in turn, were highly reliant on the U.S. as a market. Today, viewed over the whole of 2013, we've measured the West African output to the U.S. as only 8% of their production. And this slide, I'm just going to introduce the very beginning of it. I want to point out the orange slice at the bottom. In the last quarter of 2013, we saw the U.S. share of West African output at a mere 5%. So clearly that trend continues to go downward, less and less U.S. dependence. At this stage, I'll pass it over to Jay Syret, who's been doing much of the analysis.
Okay, thanks, Paolo. So I've been looking very closely at crude flows leaving the West African region over the last few months, and especially in the last quarter of 2013. You can see here that in the last quarter alone, around 350 million barrels left the West African region and headed to all sorts of places, mainly dominated by China and India, totaling 36% of WAF output from the last quarter. But what's interesting here is that it really demonstrates the global appeal of West African crude. You can see here deliveries across all of Europe, Italy, Netherlands, Spain and France, so both European, Northern European countries and countries in the Mediterranean area. But also you can see many deliveries to South America, such as Brazil, and in 30% to other countries, which we'll delve into more on the next slide. So what we can do is take a more granular look at country deliveries by investigating week-on-week shifts in delivery patterns. And you can see here that even regular purchasers of West African crude, such as China, India, Spain and France, they really vary their buying patterns of West African crude. But also it's clear that there are many opportunistic buyers in the market. And in this particular example, from week commencing 13th of January, you can see purchases from Sweden, Denmark, places like Thailand and South Korea. And it really does demonstrate the global appeal for West African crude. Taking an even more detailed view, we can look at this into the amount of West African crude heading to Europe week on week, but also month on month. And here in this example, you can see we've correlated the deliveries to the Northern European countries against Spain and Italy. And it's interesting to see that in general, the Northern European countries import less than Italy and Spain combined. And on a number of occasions, deliveries to the ARA region, the UK, Germany, and Scandinavia, it's quite often just 1 or 2 million barrels a week, and in some instances it's even 0. And this led us to see if there was any correlation between liftings out of West Africa towards Europe and the price of Brent, which we'll come on to in just a few slides' time. Taking a more global view, I've picked China, India and the US into 3 different categories here, what I've termed heavy lifters of West African crude, such as China, who regularly import around 6 million barrels a week, and it can go, you can see here, the week commencing 4th of November, as high as 12 million. You see low lifters, such as the States. As we said in the first few slides, exports to the United States are now minimal, maybe 1 or 2 cargoes a week. However, perhaps more interesting are lifters such as India, who seem to have much more sporadic buying pattern, kind of an all or nothing attitude. And by this graph you can see they seem to even import 0 barrels per week, or in the region of 8 to 10. And it led me to think whether on these particular weeks, whether anything in particular was happening within the global market space that impacted the buying pattern of India. So if we take week commencing 6th of January as an example, we decided to look at the average number of days that each cargo remained in the West African region after it had loaded. And you can see here that on average this number was around 6 days. And many cargoes heading towards, say, Brazil, France, Italy, even Spain, and there's one here for Taiwan, were all within that 6-day average. However, if you look at the average time spent in port for Indian-bound cargoes, so the amount of days that the cargo remained in the West African region before heading to India, this number was 14, more than double the average. and for China it was 11. This perhaps suggests that they were more opportunistic buyers of distressed cargoes or perhaps previously unsold cargoes, as there were a number of reports in December and January suggesting that a number of West African cargoes had remained unsold at this time, which may explain the Indian buying pattern for that particular week. Also of interest is kind of the question, so who buys what and from where? And this is incredibly important, as certain regions do favour particular grades. And you can see here that crude loaded in Congo is almost exclusively bound for Asia, as are the Angolan grades. However, in Nigeria, you can see there's a much more global appeal for Nigerian crude, with many heading towards North America and especially the European countries, and even 58 million barrels heading towards Asia within Q4 2013. Interestingly, of that 58 million barrels, 63% actually went towards India. Now what this does from a global market perspective is open more competition for Nigerian grades, as similar can be found in the Middle East, and is a much shorter trip to the likes of Paradip in India, which may or may not put price pressure on Nigerian grades versus Angolan. So looking at future projections, and this is particularly interesting. So this slide here, another piece of analysis we've carried out, and what we show weekly, is the total amount of WAF crude oil that is currently on the water, i.e. what is currently being delivered to their final destinations and to which regions is it heading. And this may have an impact on regional prices within that particular week or shortly after. So if we take this week, for example, week commencing 20th of January, we can see that WAF unloadings expected in the European Mediterranean region is around 13.6 million barrels, which is actually not far from what will be unloaded in Asia. And you can see here as well that we're not expecting any cargoes to be delivered in the northern European countries, so the Arrow region, the UK, Scandinavia and Germany. If you compare that to what will be happening next week, around 8 million barrels less will be flowing into the European Mediterranean countries, perhaps having an impact on pricing in the near future. So this again led us on to what implications this can have, or whether there's a correlation between the price of Brent and the future unloadings of WAF crude. And our predictions here are actually very well correlated with what we actually see unloaded week on week. We've been tracking this since the beginning of December. So we looked at a particular correlation of running a week-on-week change in the price of Brent versus the week-on-week change of the amount of West African crude that left the region 3 weeks later. And it's clear for all to see that there's actually some very interesting trends emerging, and we trust this will enable us to predict the future unloadings of what the future unloading and delivery patterns of West African crude will be. So to summarize our outlook for Q1 2014, and looping back to our first slide on WAF crude price pressure, in our view, or in my view, this is firmly on the downside, mainly because of direct competition from Iran. Recent negotiations seem to be going well, and we may expect crude exports from Iran to be ramping up. And India are already looking to negotiate deals with Iran for imports of Iranian crude. Of course, as we know, Libya is now ramping up to full production, so barring any fundamental change, we may see that have a downward pressure on WAF differentials. Plus, there's also reports of higher freight rates compared to other regions. Again, countries such as India may therefore prefer to import from West Africa, from the Middle East. And as we've seen from the previous graph, with Brent suppressed in early January trading, we do expect the WAF differentials to follow, and therefore, as Genscape analysis has shown, deliveries will reduce in the coming weeks. However, there is a scheduled outage of Plutonio in March, putting some upward pressure on Angolan grades. And also, of course, as WAF deliveries reduce in the coming weeks, we may see some increased demand towards later February. So I hope that's given you some interesting insight into the kind of trends and patterns that we're beginning to look at here at Genscape. And I'm just going to pass you back over to Paolo, who's going to discuss the detail of the Genscape WAF report.
Yeah, thanks very much, Jay. I just wanted to, at this stage, to touch on what it is we're doing with the weekly report and how we're delivering it to people, the sorts of objectives we have. The report we're putting out as of this week is a weekly delivery on Monday mornings with a monthly roundup and summarization to normalize the numbers for monthly numbers, because we know many people are looking at monthly data. We're examining the deliveries of crudes by country, where they go, much as we've done in some of these slides here that Jay's gone through. We're going to be sending out alerts on the day as we see changes in destinations. I think of particular interest to many of our clients is the changes in patterns in real time or near time when we see cargoes that may be destined for one place turn around and go to another. I believe we saw one last week that paused in the middle of the Indian Ocean for quite some time. I'm not sure if Jay knows exactly where that ended up going, but I'm sure it was in last week's report. This is a sample of one of the tables in our regular weekly report, how we enumerate each individual vessel, giving details of its size, where it loaded, and where it went, including the load dates. As you can see, the implications of all these things drawn out in the green text below. We're watching the cargoes to their final destination. Very often we'll see those destinations change, or perhaps they'll stop in Singapore and go somewhere else. This is an example of a cargo here in the bottom line that went to Rotterdam. Clearly that was just a bunkering stop on its way to Huelva, or some kind of, maybe not a bunkering, but I'd like to just summarize what we've said here at this stage, that we are effectively leveraging the data that we have from AIS. Genscape acquired Vessel Tracker last year, and we've been making the most out of that data to complement our other forms of analysis, and we're rounding that up into a weekly report, as I've just said. Some of the observations that Jay has made in this presentation today include the study of the various lifting patterns, some interesting anomalies or behavior on the part of India and China, the way they're lifting, some interesting changes in destinations of cargoes on the water, the varying delays of cargoes between loading and their actual departure from the region, and of particular interest, perhaps the correlation to Brent, how exactly that works. We'll be watching that closely in the future as well. Sorry, I meant to stay there. I'm going to hand back to Simon at this stage.
Yeah, thank you, Jay. Thank you, Paolo. Very interesting analysis, and I'm sure there's further correlations that this service will highlight over time. So thank you for that. And also thank you for all the participants that's put questions up to us at the moment. So if you guys don't mind, I'll relay some of these over to you guys. The first one, which is relates to what you just said, Paolo, quote unquote, I have my own AIS service. Why can't I just replicate your product? Fairly brutal, but over to you.
Well, indeed you can, and I encourage you to do so if you can. Many users of Bloomberg and Reuters have similar data. We know some of those, in fact, rely on the same underlying data that we have. However, I'd add that we put a lot of our own analysis into the data. We have some extra advantages, having some close ties with the direct providers of that data and some support that they give us in not only managing but also analyzing that data. Furthermore, it's a pretty considerable investment of time and energy to do so. So if you do it yourself, fantastic. If we can help you by doing what we do and adding the additional layers of analysis, then that's fantastic too.
Okay, thanks, Paolo. Another question here. How do you know the cargo loaded quantity? Perhaps I can take that one. That is a function of the size of ship, and we make various assumptions on the cargo lifted. As this is a macro aggregate product, it is not a track the barrel, individual barrel product at all. So we're looking at trends and aggregate values rather than specific loaded volumes. So I hope that answers that. Another question, how do you know the cargo grade? Paolo, do you want to?
Yeah, the grade is, I think for many of you who've been in trading for a while will realize, of course, that West African grades are pretty clearly implied by the ports. So at this stage, we were a bit simple in our approach to that, and the grades are simply, we showed the load ports, so the grades are clearly implied. However, it's starting to become apparent to us that some people will want more, so we'll soon expand that to include the more detailed grade.
Okay, thanks for that, Paolo. Question here for, excuse me, for Jay. Other than Nigeria, Angola, Congo, what countries are covered? Ghana, question mark, Congo, Brazzaville, question mark, and Equatorial Guinea, question mark.
Okay, thanks for that question. Yeah, the graph we showed earlier, or I showed earlier, was for Congo, Angolan, and Nigerian grades. Of course, we have seen, and we do cover the whole of the West African region, which will include the Ivory Coast, Equatorial Guinea, and also Ghana. It was just, for this particular presentation, the grades coming out of Angola, Nigeria, and Congo were of most interest, given the vast majority come from those countries. And we've even seen one or two from Togo and places like that. So yeah, the whole is basically pretty much from the western border of the Ivory Coast down to the southern tip of Angola. So that whole region is monitored.
Okay, thank you for that, Jay. I think there's another question here. We've got so many. How do you handle vessels that disable their AIS? Paolo, do you want to have a word on that?
Yeah, it's an interesting one. We've seen a few patterns that repeat. There are some ports we've observed where we believe the port instructions or the port captain instructions are to disable or turn off your electronics. Certain captains will interpret that one way as meaning we should turn off our AIS. It's been suggested that vessels are turning off their AIS to basically fly beneath the radar, to mix my metaphors. We haven't seen so much of that out of West Africa, to be honest. We have seen some disappear briefly but reappear after not a very long period of time. So to date, we've not really seen that as a problem that we couldn't surmount by applying other factors of intelligence and just looking at the path of the vessel to calculate where it was going. It eventually tends to show up, but as I said, we have some other sources of information that we leverage, but it's about as clear as I can be on that one right now. Anything else, Simon?
Yeah, there's an interesting one here. Did I understand it correctly that the correlation can explain future loadings into Europe? What about Asia? Have you found any correlation that can be used to predict future loadings of Asian regular lifters? I think the answer is, we've done some work. Clearly there's a lot more work that can be done. The correlations that we've seen have been very interesting, and I'm sure, as I mentioned earlier, there's further correlations that this service will highlight over time.
Yeah, indeed. That's a good answer. I think I'm sure people on this call will do their own correlation work with the data that we can provide from this service, and we will do more going forward. This was a fairly early form of correlation work, and it was interesting enough to show to everybody, and I'm sure there'll be more work coming in the near future.
Okay. Another quite a simple question, actually. Where and when will the alerts appear in the report, Paolo?
They won't be in the report itself will be mailed out on Monday mornings. The alerts will come out as and when they seem necessary to us. So in effect, we're watching the vessels on a daily basis, and when we see something that is relevant, it will go by email to your inbox, to any subscribers of the service.
Okay. Another question. Do we go down to berth level for analysis?
Yes, of course we do. I'm not sure where else to go with that question, Simon.
Yeah, I know. I think
it's yes.
I think the answer is yes, and obviously, again, just repeating the fact that this report is an aggregate report, isn't it? Really, it's
yeah. Of course, we're looking at things in greater detail than everything we express on the daily alerts or the weekly PDF.
Okay. I do have another question. Are we monitoring West African production levels? I suppose indirectly we are. Indirectly we
we're
are.
monitoring exports rather than production level, yeah.
Yes.
I don't think what we're doing involves watching what's actually being produced in the direct sense, but the exports do imply production levels, since almost everything gets exported, doesn't it?
Yeah,
We
absolutely.
don't have a figure to hand.
No, I think the majority does, but
Yeah.
here's an interesting one. I can't answer this. Does India have any storage tanks for crude into which they can put speculative West Africa purchases? And I apologise for that. I think either we're on fire or just about to have something or other. Anyway, I'll start again. Does India have any storage tanks for crude into which they can put speculative West Africa purchases? And would Genscape have any plans to monitor this storage capacity if it exists?
Interesting question. I don't know off the top of my head. Jay's shaking his head. I don't think we know much yet about Indian storage. And to speculate on whether we would monitor it, that's a little early days. If it's interesting to enough people, that the answer will have to be yes. When we monitor storage, it's one of our most successful businesses, of course, monitoring storage. It's a very high investment business for us. We spend time and energy flying planes and helicopters and the like around storage tanks to measure their capacity, but also their contents, either by reading the floating roof, if there is one. If there isn't, we use infrared cameras to view what's inside the tank or what we can see, provided it's not heated. But yeah, the short answer is not yet.
Okay, fine. I couldn't answer that, so great answer, thanks. Another question, the correlation that we indicated is between Brent and future loadings, but currently the major factor is freight cost, which is affecting the imports into Europe from West Africa. I think, if I can take that, we are beginning to look at freight costs, and we certainly recognize the importance of freight in the global oil economics. I think over time there is certainly space for inclusion of freight as a factor in this, but clearly you know, all potential users of this product will be able to use their own analysis as well and put in their own sources of intelligence and, I suppose, come to their own conclusions.
Indeed. We don't pretend to answer every question for everyone, but we do seek to get you very close to the goalpost if at all possible.
Okay. I've got another question here. How much history do we have?
Yeah, interesting question. The detailed history that we're currently working with goes back to October last year.
Okay.
We can pull a great deal more if we want to, but the analysis we've done so far doesn't indicate any need to do so. If there's a specific demand, we could pull it and make sense of it. But,
okay, all right. So it is available.
It is available, but our work has not relied on that so far. We've simply started collecting in the start of October and worked with what we had on hand to draw the conclusions we have. We've seen that the changes over the past year or two have been so great that honestly we didn't think there was going to be any relevance to go back very far in history, that things are changing from this point forward, and that's the interesting story for us, I believe.
That's a
but
good
there's, you know, we can dig back into the cupboard if we need to.
Okay, now that's a good point, because obviously this is something for the future, of course, rather than the past. We've got so many questions. I'm sure we've got time for one more. How do you intend to improve your destination predictions and extend those further out?
Also an interesting question. We have a stake in a partner company called Commodity Vectors that is doing some very interesting work with a learning algorithm to predict where cargoes are going. To date, they've been cutting their teeth on slightly simpler cargoes like LNG and coal, and doing some very interesting work with that. We also are leveraging other forms of intelligence that include our sources in shipping and the oil trading markets. But I think what looks promising is the work being done by Commodity Vectors, but we're going to pursue a number of different paths to increase our foresight in the near future.
Okay. Well, I think we're a bit out of time at the moment, but look, again, thank you, Paolo and Jay, and more particularly, thank you for all for joining us today. I am aware that each of the participants will be receiving this week's latest West Africa report, as well as a recording of this webinar. Free trials of this new product are available through the Genscape website. And if there's any further questions, I'm sorry if we didn't reach your particular question, please reach out to us and we'll address that after the event. And finally, we really appreciate if you'd spend a couple of minutes to complete the 3-question survey at the end of this webinar to help us improve this service moving forward. So with that, many thanks and goodbye for now from Paolo, Joe and myself.
Thank you.
Thanks.